Hi there, welcome to Kneppy Invest. It is currently 4:05 p.m. on the 9th of June, which is the last trading day of the week. And because it is a public holiday in New South Wales, Victoria, and maybe a few other states, but not Queensland, Queenslanders have to go to work. I won't be working. The market is not going to be open. I'm not a big fan of that. I hope or wished, or wish, not wished, wish the market was open 365 days a year. Now, I'm not being absolutely serious when I say that because on occasion I do like a break from the daily routine I go through every single day. However, in saying that, my routine typically takes about 1 hour. So I am showing you the last bit of my routine in these daily updates video. Uh, Although I don't go through the announcements this time of day, usually I go through the announcements before the market opens, which I do every single day. So let's go back through some of the interesting announcements released over the past 2 days. And funnily enough, only one announcement of those announcements was released today. And we definitely have to discuss that because the share price of that company rose 300% in one day. Hopefully, you were not a shareholder of that company and sold your shares yesterday because you missed a four bagger or three bagger, or whatever sort of bagger in one day. Now, I always say don't worry about buying into a company whose share price has risen 100% or more in one day because the information has changed and possibly the market hasn't fully priced in that new information. A lot of times the market doesn't price in that information. In this case, in fact, I definitely would not even be thinking about taking a position in the company that has risen 300%. And I'll talk about that later in the video. But let's go back to yesterday to see some of the interesting announcements. Some of these announcements were better than the others. And we start off with a few New Zealand-based companies releasing some possibly interesting announcements. For instance, Air New Zealand provides earnings guidance update for financial year 23. Exactly the type of announcement I want to see. Guidance update, trading update, profit upgrade, profit downgrade, that sort of thing. However, there was not much a reaction from the market. In fact, let's have a look to see the chart. I was a shareholder of Air New Zealand for a very brief period of time, just a trading stock. This is not a high quality company. And the main reason was you can see the share price trying to get into an uptrend here. Not trying, it wasn't an uptrend from these lows back in June last year. Got to about 75 cents, and that was it. Share price has been going sideways ever since about November of last year. So that's why I got out. Share price is doing nothing. It's consolidating. What we want to see here is a bit of an outbreak or breakout in the share price. And for those shareholders, they want the share price to get above 75 cents. If the share price falls below about 67 cents or 65 cents, that will be negative for Air New Zealand. So I have gotten out of this trade, very small profit. And when I say very small profit, I'm talking about like maybe 1 or 2%. So very small. Anyway, so that wasn't an interesting announcement simply because the market didn't react. And I did open up the announcement, but I can't remember anything about it. Now, the next announcement was the sort of announcement I'm always looking for, and that was by a company called Enero, which is sort of like a marketing company, something like that. And they released a trading update. This is exactly the title I want to see, 8:27 a.m. trading update. I did go through this a little bit, and because when they released the half-year results back in February, the management were very cautious, very negative in the outlook. And the share price plummeted on that day, and the market didn't react to this information, this trading update, well at all. Share price went down. Let's have a look. Went down maybe 10% yesterday, and down another 8% today. You can have a actually look how much it went down. Yeah, 9.5% yesterday, down another 8, possibly 8%. You can see indicated price because we are in the closing auction suggests the share price will close at $1.48. In fact, we can just wait because the closing auction should be any second now. You can just keep on clicking on this. And if you keep refreshing the prices, you'll see when the closing auction has finished, because it should be finishing any second, because we have the first bid, buy bid at $1.52, the first sell bid $1.37, and when they go away, you'll see was what the computer algorithm is doing is matching up all the buy bids, all the sell bids to come to the price. Indicated price when they match all those particular bids up is $1.48, up 3.5 cents from the trading close, normal trading. So here we are, share price, yeah, $1.48. So only down 5.7%. So a good closing auction for Enero. Maybe, I haven't gone through this particular announcement just yet, might go through it during the weekend, but it was negative. However, in saying that, the valuation of this company is quite low now. There's been a big sell-off. Market cap, I'd say 133.7 million. So have a look at some of the numbers they're saying in this. So revenue between about 241 and 244 million. EBITDA between 78 and 81 million. So more than likely, they do spend a lot of money in depreciation amortization, which means probably their profit's going to be significantly lower than 78 and 81 million, because if it's not, this company is currently trading less than 2 times EBITDA, which does seem quite low. So possible value in this company. Now, there's some sort of marketing company. So if you don't know what a company is, just go to the announcement. And a lot of times the companies will have an about section right at the bottom. It says here, Enero Group is a specialist portfolio of marketing, technology, and communications businesses listed on the ASX. And you would think marketing and that sort of thing is highly, cyclical, that sort of thing. So this is not just point in the cycle to be in these sort of companies unless you think the cycle is about to turn. And maybe now is the time to think about taking a position in this company, because most of the, and this is just me hypothesizing, most of the bad news has been priced in and the low has been reached or nearly reached. So that's why I have definitely put this company onto my watch list because of the valuation of the company right now. Doesn't mean you have to. Maybe do some more research on Enero Group. It's profitable. And again, trading at less than 2 times EBITDA does seem ridiculously. So I'm going to have to do a little bit more research. Maybe the market sees something I don't. Now on to Zip. Yes, Zip yesterday went into trading halt at 9:18 a.m. And the trading halt, here it is. Trading halt was for a capital raising. It was an interesting capital raising, to be honest with you. So not only was it a capital raising, it was a liability management exercise. I had no idea what that meant. So I said the word exercise, and I think the management are going through some sort of plan, some sort of drill, if you want to call it that. Yeah, drill. Some sort of drill in regards to their liability. So I was a little bit confused what exactly that meant. So and the good thing is, so this is the other thing. Some people will read the trading halt and see trading halt, the shares in this company will remain in a trading halt until the earlier of the commencement of normal trading on Tuesday, 13th of June, or when the announcement is released to the market. So a lot of investors see the 13th of June and think shares of this company won't be traded until then. But really understand this is all about when the announcement is being released to the market, and the particulars of this capital raising were released later in the day. In fact, they were released at 10:54. So about a 1 hour and a half after the company went into trading halt. So let's actually go to the particulars of this. So we'll just open up Zip announces. I'm not sure if this is, I suppose it is sort of good news because their debt significantly decreases. And we are pleased to launch this liability management exercise, which will allow us to retire a significant portion of our liabilities at a fraction of face value and restructure our 330 million zero coupon convertible note to a liability of 137.8 million. Once completed, the transaction is expected to be cash neutral for the company, accretive to Zip shareholders, and strengthen Zip's balance sheet. So you've got to trust the management. They know what they're doing in regards to this liability management exercise, and the very fact that it's a fraction of face value, something like, I think it was 40 cents to the dollar, if I remember correctly. which means the debt holders don't have that much confidence they'll be able to get their money back or something like that. And they're also doing a capital raising at 47 cents, a small discount to shares. I don't think shares are currently trading. Yeah, not trading. Oh, they are trading. And they went as high as 55 cents. So initially the market did like this announcement, but then a little bit of selling during the day and forced the share price down to where the shares closed the previous day. So I'm going to have to go through this announcement a little bit more because there's still a lot of things I don't understand. Why? How did they decrease the debt by so much? Because a significant discount to the face value. Why? Why? That's my main questions about that. Why would the debt holders do that? So let's, yeah, why? Anyway, so that's Zip. The next interesting one was Avita, 9:29 a.m. And Avita Medical receives FDA approval for full thickness skin. So these are another two more words I'm always looking for, though FDA is not a word, it's an acronym. FDA approval is something I'm always looking for as well because the market typically reacts really well to those sort of announcements. I've seen share prices increase by over 100% on FDA approval. Now, Avita Medical didn't do that, only increasing 10.7%, but positive sentiment lasting today, up another 1.7%. Chart looks pretty volatile. So let's have a look at the chart for Avita. If you really like this company, time to buy was about 3 weeks ago. Share price went from $5 all the way back down to $3.30. Now it's gone all the way back up to nearly $5. In fact, yesterday, it did get above $5 for a brief period, but a bit of selling. And the reason there was a bit of selling was because some shareholders bought in higher prices only a month ago. And as soon as the share price fell, they thought this company was a dog stock. Because investors nowadays have a patience of a gnat. Well, that might be negative to a gnat. Maybe gnats have better patience than some investors. So that's why there was a bit of selling yesterday. But share price did actually get to a high. Definitely not an all-time high, because share price has been higher than this in the past, significantly higher. In fact, share price got to about $17 in 2020 before the COVID-19. Look at that rise. This is the sort of company you want to be holding. Share price went from $1.57, we'll say $1.50, all the way up to $17 in about 1 year. So 2019 was Avita Medical's year. So share price has a long way to go from there, but things are looking up for this company. I am a little bit more bullish about this company, although I am not a shareholder of Avita. And you can see the breakout. The time to buy this company was back in January, and there was a breakout then. You can see a breakout on the 18th of January. Share price rose on that day 7.6%. You can see the share price pull back. Let's zoom in on this breakout. Share price broke out on this day. Share price pulled back, tested this breakout, and then started going again. So you had a 5 or 6 days where you could have bought in just after the share price broke out. Pretty good volume on that day as well. So that was the time to take a position, about $2.30, also maybe $2.31 or so, and share price has doubled since then. So I missed that one, but don't fret if you miss an opportunity, because there's a lot of opportunities out there, trust me, if you know what you're doing. So we'll get rid of Zip, and we'll get rid of Avita. Next company is ServiceStream. Now, this announcement was at 10:15. ATO tax refund. Now, that's not the sort of announcement I probably would even click on, let alone read, because I don't really care about tax refunds. I don't care how much it is, or that sort of thing. But what I did notice was the market liked it. So for some reason, it was like $50 million, maybe more than that. Market really liked it. Share price rose 8.7%. But then I had a quick look at the chart, and that's actually what got me interested in ServiceStream. This is not a high quality company. I had a look at their margins. Margins are minuscule. A lot of revenue, but the margins are tiny. So last year, revenue of $1.5 billion, but they were not profitable. Even if you go back further, margins or profit margins, 3.6%, 5.3%, 5.9%, 6.5%. And I think I did have a very quick look at the half year or something, and really small margins. But got to look at what the chart or what the market is doing. So if we draw a line at the last two highs, So let's have it's not exact high. So when I draw a line like that, I don't look at it as a line. I look at it as like a zone. So we can see the share price was really struggling to get above, we'll say about 71 cents or so. And because we know it's struggling to get above 71 cents because share price went to 71 cents in February and March and then pulled back. Got to 71 cents again in May, then pulled back. Look at that. Classic. Because they're selling. Because traders know that 71 cents is resistance level because the previous high. So what we're waiting for is a breakout of the share price above that resistance level. And that happened yesterday on very good volume, pretty high volume. And the share price today has stayed above that level, 71 cents. So at this point in time, this looks like it could be a successful breakout of service stream. So if I was thinking about taking a position in this company, it would be truly a trading position. It would not be for the long term. And when I say trading, I'm thinking maybe 3 to 6 months, because a lot of times this good news, not necessarily call this good news, ATO refund, but the market thinks differently than me, and the market overall is smarter than I am. That's a universal truth, I think, for everyone. The market overall, group everyone together, is smarter than the individual. So the market liked it. Doesn't matter what I think about it. The market liked it, and this could be a breakout for service stream. Share price was in a downtrend. Share price was consolidating between February and now, and a possible breakout for service stream. So I'm actually going to write that down and put it into my watch list. It's not in my watch list right now. Go service stream. Good work. And then we had, after close, a company called Maas Group. Now, always confuse Maas Group with Mader. Mader is M-A-D. And I'll just show you the Mader chart. This is a really nice chart. I've been meaning to take a position in this company for a while because the share price has been in a beautiful uptrend for ages. It's not a newly listed company, but the share price took off, around about August 2021. You can see the share price going sideways for over a year. The share price took off, has been an uptrend ever since, just keeps on going higher. So I confused Maas Group, which is not Mader Group. So let's have a look at Maas Group. They released, actually, let's go back to the announcement. They released a tightening of financial year 23 EBITDA guidance. So I did have a look at this announcement, and it's not a profit downgrade in the true sense, because previous guidance said they expected EBITDA, they call it pro forma EBITDA, to be in a range between 150 million and 180 million. So let me say that again, between 150 million and 180 million. So it's a fairly big range, isn't it? So it's like a 20% range. And now they've tightened that expectations, and that new expectations is now for EBITDA, or pro forma EBITDA, to be in a range between 150 million and 165 million. So this new guidance wasn't a profit downgrade. It's not different from the previous guidance. However, it's on the low side. So in a way, the market was hoping the new guidance and the results would be on the higher end of that initial guidance range. So they maybe were hoping between 165 and 180 million. So the market a little bit disappointed. However, Managing Director and CEO Wes Maas, that's why this company is named Maas Group. I didn't know that. I haven't done any research on this company. Noted that the range represents growth of approximately 20 to 32% on the pro forma EBITDA from financial year 22. So nice growth there, but the market didn't like it. In fact, not only didn't like it, that's a negative sentiment has transferred into today. So it did look like, and another reason I was starting to follow this company, it did look like the share price wanted to be moving into an uptrend. So we had a higher high, higher low, but we did see a little bit of weakness the last few days, and the share price has collapsed today. Down, well, not much, only 6%, but it was down as much as $2.84. So we'll say the share price was down over 10% at one point today. So a little bit of set buying did come in. So that's a good sign moving forward for Maas Group. Maybe the market did slightly overreact to this announcement. I didn't think it was that bad, but possible, if you do like this company, possible buying opportunity to buy into this company 6% cheaper. Go Maas Group. Well, maybe not go Maas Group, but go whoever wants to buy this company. Now on to today's announcements, which is only one. Unless something interesting has been released recently, no, nothing there. A lot of capital raising announcements today. I noticed a company called Tek Ocean Group T3K, voluntary administrators appointed. I've never heard of this company. Market 5.7 million. Based off the ticker code, it's a relatively new listing on the ASX because it's got the number in it. So let's have a look how old this company is. Tek Ocean, something to do with the ocean, you would assume. Yeah, so it listed in September 2021. Share price has gone from 50 cents down to 17.5 cents into voluntary administration. What does this company do? Operates as an energy industry services company. Provides engineering, subsea, marine, logistics, consultancy, specialist oil, gas services for both offshore and onshore projects. The company was founded in 2007. Unfortunately for T3, whatever it's called, T3 Ocean Tek Ocean Group, voluntary administrations appointed today. Anyway, only one announcement I was intrigued by today, and the reason I was intrigued by it was because of the particulars of the announcement. So let's go to, there it is, Limeade 826. WebMD to acquire Limeade for 42.5 cents per share, CDI and cash. So I had a look at that price and I was like, I didn't know Limeade was like 10 cents. And I thought, that's a massive premium to the share price. And the premium was, 300%. So here it is. So hopefully most people have heard of WebMD. So I actually have gone to the WebMD website. Limeade, I can't remember what they do, but they do have something to do with health. In fact, I might say it here. So Limeade, an immersive employee well-being company that creates healthy employee experiences. Today, it has entered into a definitive merger agreement pursuant to which WebMD will acquire Limeade. So the price of this acquisition is 112 million because, again, the offer price represents a 325% premium to the last traded price of Limeade. I have not seen such a premium. In fact, few of the takeovers in the last few months have been to a discount to the last traded price. So congratulations to Limeade shareholders. And this was probably, or maybe the good news they were waiting for. So as you would think, the share price of Limeade was up 300% today. Whoops. 305% today. Let's have a look at the chart. And you'll see the share price in a really good downtrend. Beautiful downtrend. Share price as high as over $2 back in October, November of 2020. Share price in a really good downtrend. And the last time the share price was 40 cents was back in March, April of last year. So just over 1 year ago. Just shows you how much the share price has fallen in that time period, that this was, at a significant premium to the last share price, but only at a 1 year high. And I was thinking about this. This was like, I sort of feel sorry for shareholders of this company, maybe long-suffering shareholders of this company who decided yesterday to sell out at what price? 10 cents. 146,000 shares traded yesterday. We'll say 147,000. 100,000 shares traded the previous day. In fact, the share price low looks like 9 cents on the 6th of June, 50,000 shares traded. So just imagine you sold 100,000 shares of this at 10 cents yesterday. So 100,000 shares is $10,000. And then you see this announcement, you go, is that the worst timing possible? I could have sold today at $40,000. Now, yesterday I sold it at $10,000. So that's a $30,000 just gone kaput. But just imagine on the flip side, you bought this company at 10 cents, 100,000 shares at 10 cents, and instantly you have made $30,000. So sometimes it's just luck, unless you bought 100,000 shares yesterday because you knew this was going to happen, which of course is illegal if you are an insider. Is it illegal if you're not a part of the company and you still hear information? Say you're on a train and you hear two people talking, they're involved in Limeade, and one of them says, you just hear that one of them says, you just hear one of them saying that their company, Limeade, is going to be taken over at a significant premium to the share price, and then you buy Limeade shares based off that news. That can't be insider trading because you're not an insider. That's what would be my thinking. You just saw some information that no one else has, and you took advantage of it. So anyway, I have never seen such a premium. I haven't seen a share price rise 305% in one day. Now, I would not react. In fact, if I was a shareholder of this company, I would sell straight away. On this news, instantly sell. Share price is going to go, so the share price will creep up higher to that end price. Was it 42.5 cents? But I'll just take my profits now and buy something else because the share price will creep up very, very slowly. You could hold on to your shares because you might think there might be some competing offers. But I think because this was such a premium, the potential for premium offers will be fairly low. So this is the one instance. In fact, whenever I own a company and there is a takeover bid for that company, I will almost always sell on that bid because a lot of times the bid doesn't go through and then you see the share price absolutely collapse. Sometimes you'll see competitors come in and bid the share price higher. There is one company, I think it's IHR in, maybe it's no longer listed. IntelliCare or something had like 3 competing bids or something like that. And share price kept going higher because of these competing bids. But a lot of times it doesn't work like that. Let's have a quick look at the best performing companies on the XAO or Ordinaries, XSO, worst performing companies. See if I missed anything. Up and Down, Jervoy, AQZ, which is Alliance, EML Payments, and there's Enero. Just looking for some companies. Bubs, Premium, Lindsay had a bad day. John's Lin Group, which I am a shareholder of. It's okay. I don't care if there's a one bad day. Some good performance here on the upside. Gal, Magnus, that's the Latin Resources, Imogen, Panoramic, Aries Resources, Red, Western African, whatever it's called. I'm a shareholder of that company. I should know what they're called. Gold must have had a good day today because a few of these companies are gold stocks. And then let's have a look at the XSO. See if there's any other companies here of interest. Not that I see. Novonix down 3. So Novonix, I said the other day, Novonix had a pretty good day the other day. Back to Novonix. Had a pretty good day, up almost 20%. And I did see some chatter in somewhere that this was a breakout. And I was thinking, no, it's not a breakout yet. Even though it's pretty good volume, there was a gap up. We've seen the share price for 7% yesterday and a further 3.3% today. And the main reason I was thinking it's not a breakout, or it's more risky anyway, is because the share price has been higher not that long ago. So share price was higher in April, 2 months ago. So there's going to be resistance, even though this was a good announcement based off the market reaction. It's not surprising to see a little bit of sell-off in the last few trading days. But I think possibly the low has been reached for Novonix, possibly at this point in time. And Lavisa, another bad day for Lavisa. Let's have a look at the good nickel, something to do with nickel. Nickel Industries, Imogen, and this is Red Metals or something, Red 5. 29 Metals, which I have to do a video on soon. I've already prepared it. Adairs, nice day for Adairs. Oh, what happened to what's that company that had a bad day the other day? Baby Bunting. Still down, another down day. It's gone below. Oh, Baby Bunting has gone below $1.25. If you watched my previous trading update, I said $1.25 is very important. Why is $1.25 very important? Let's go all the way back. I should have drawn. There it is, $1.25. So I can draw that. In fact, we'll go weekly, so I can do it easier. Easier. I don't think that's a word. There it is. Drew this line not as straight. And the reason I've drawn that line is because that was the lows of the share price back in 2017 and 18. It was like a double bottom. It was test. You can see a test. Just after the second bottom, share price went back down about 3 or 4 weeks later, tested it, and then took off. This happens a lot. Tests happen a lot. And I said that possibly 125 would be a good support level for this company, and the share price of Baby Bunny is just below it. Now, this is not negative yet because it is the end of the trading day, and if we do see some buying in the next few days, that could be good, and maybe this is the bottom, but the very fact that it is struggling to stay above $1.25 is negative. Really big volume over the last 4 trading days. So really negative week for Baby Bunting. In fact, we can look at the weekly down in the weekly decrease in share price, 32% for Baby Bunting. Bad day. And next of all, we'll have a look at top gainers. Move my head over here. Limeade, of course, Marquee Resources, and there are so many companies on the ASX, I just know so little of them. Galileo Mining, so that's one of the best performers on, was it the Ordinaries? So I'd never heard of that company either. Netlink, Singular, Structural Monitoring Systems, Magnus, I've already sort of mentioned that in passing. I just want to go down just to have a look at the above 10% rise. And I'm really quickly going through this just to see if there's anything I've missed of interest. And a lot of times I will miss stuff if I'm going this quickly. And then we'll have a look at the worst performing companies. Arcadia Minerals, another company I've never heard of. Cooper Metals, another company. It's a lot of mining exploring companies. Best performing companies, worst performing companies. Look at the markup cap of those companies. 6 million, 7 million. Prominence Energy, third best performing company. It says an ETF, 1.7 million. Fourth best, Codrus Minerals, 5.26 million. Even ENRG Elements, 12 million. So I ignore all those because the share price can go up and down, can be very volatile. Brookside Energy down 13%. Bit of selling for Brookside today, maybe. Let's have a look. Oh, yes. 24 million shares traded. It's not that uncommon. I think there could be value in Brookside. I think it is undervalued. They're doing share buyback as well, which is interesting, but the market doesn't care. And that could be it. Okay, that might be it for today's video. If you have any questions about any companies I've mentioned in today's video, I'd love to hear from you. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial news. That's it for this video. Have a good day. Bye.